Hi there, it's Callum Newman here. I'm the small cap specialist at Fat Tail Investment Research, and today I'm joined by the father-son team of Lion Selection Group, who specialise in junior resource sector of Australia. Been around a long time, over 20 years, and we're talking about three big things today. Where are we in the mining cycle? What's happening in the Australian junior mining market with all the shares there? And the outlook for gold shares especially, and some of the projects that the boys here are very keen about and investing through Lion. So we've got Robin Widdup and Hedley Widdup. Thank you for coming, gents. Robin, I'm going to start with you because age before beauty as such. We've got uranium, copper and gold rumbling. A lot of people are saying we're at the start of a big commodity bull market. Is that the way it looks to you right now?
Yeah, we're at the start of a new cycle. The fundamentals for all of those are looking good. And we've seen quite a bit of depression in the juniors. So you've got 600 odd junior miners who are struggling to exist at the moment. The only question we've got is how long will it take before we see the turn?
One of the reasons I wanted to get you on was you started Lion in 1997.
Yes.
When you did that, what did you see at that time? It seems, because that was before China really exploded onto the scene. Looking back, with my knowledge of mining as such, it seemed like a bold move. What caused you? What did you see back then?
I'd been running mining research for JB Weir, which was soon to be taken over by Goldman Sachs. I could see there was a gap in the market for funding emerging mining companies. And the two drivers of that were, first of all, the Lion clock, which you see today. We saw that the sector was very cyclic, and there was an opportunity to invest in the weak part of the market where we are now, and to sell in the strong part of the market. And nobody else was doing that. The second driver was that most investors in the mining sector are very short term, and they don't do research. So if you're able to have enough cash to put a portfolio in place and take a long-term view, you would have thought the model would work. And after the first 10 years, we'd netted something like $300 million that was being paid back to shareholders. So we demonstrated the model would work.
And at that time, did you struggle to raise the money? Was it a fight to get people interested?
It was because I was in JB Weir, I went along to Terry Campbell and Bruce Teal, who were the legendary industry leaders of JB Weir, and they agreed to raise the money for me. Possibly to get rid of me. I don't know.
Well, you mentioned the Lion clock there, and we'll show that a little bit later because it's important now. Yep. But did you create that, or where did it come from?
The Lion clock came from the Widdup family. I think we've got the clock runner at the moment. I was the first one with it. And what had happened is when I worked as an analyst in 1987 and the mining crash, there were a lot of people who were just ringing up wanting a name. And when the sector crashed, they were then wanting to blame whoever had given them the name. And there were a couple of big fundraisings at the time, and in the next cycle, when JB Weir then did the two biggest gold IPOs in the world that had ever been done, one was Lihir, the other one was Acacia, which came out of Shell. I needed to point out to people that we were approaching the top of the cycle, and they needed to be cautious, because if the cycle turned down, then whatever price they were paying might be halved or quartered in the near future. And everybody said to me, yes, but it's different this time. So then when the time came for the next cycle to almost get to the top, I thought it's an ideal time to go and raise $100 million for Lion. And everybody said it's different this time, it will keep on going forever. So the point is, Cal, it's always different this time. And it never is, either at the top of the cycle or the bottom of the cycle.
Cal, you should just ask what happened after Lion had raised $100 million. Within weeks, was it?
Within weeks. We had the gold scandal called Briax in Indonesia, which we were already starting to see coming through as we were watching the Canadians, and we knew that they were villains. Perhaps edit that out. But then you saw this amazing gold scandal in Indonesia called Briax, and that took the market down very quickly indeed.
Hedley, let's bring you in. So we've seen BHP make a big play for Anglo American. Where does that tell us where we are in the cycle? Are they seeing the same sort of value that you guys are?
Yeah, well, just to take a slight step back to give context here, the last time we had on the Lion clock, we said it was 2 o'clock, which means past the peak. But the thing which we'd been grappling with the most is how do you measure exactly where the peak is? Because typically when you roll over from midnight and it starts going down the other side of the clock, you're starting to see, the equity market fall away. And what we've seen is really a huge imposition on micro caps. Small caps have been belted a bit, and large caps have sort of gone sideways. I mean, there's a lot of froth and bubble in the equity market. I suppose in my view, it's gone sideways against a torrent where it should be going down when interest rates have come up, and perhaps that's what the market is grappling with. So the big caps, the BHPs of this world, have maintained their top of the market values. The juniors have collapsed away. And that's something we saw in 2007 and 8. The juniors fell very early, the BHPs hung on. And if you remember back then, BHP was making a bid for Rio. And here we are, and they're making a bid for Anglo. So if I had to use it as a way to read the cycle, I'd say that BHP is behaving like it would at the top of the cycle when its paper is very strongly valued. They can use that to either create cash by issuing more shares or issue them to the holders of a company like Anglo and walk away with the assets and make themselves more valuable. So I think it's a very toppy kind of thing, and it probably shows the juniors have headed off towards the next cycle by going down. The BHPs are perhaps yet to follow, if that's the case.
So you alluded to before about access to funding, and that's very important in the junior market. So are they still on the outer in terms of investor sentiment, or is that improving? What are you guys seeing?
Micro caps generally, if you talk to any broker, they're the hardest things to fund. But the biggest sector by number in the micro cap part of ASX is the resources. There's more than 600 of them in microcap land, and you look at any other group of companies in any other industry jurisdiction, and there's far fewer of them. So if there's 50 cents of liquidity fall into the microcap space, is it going to flow into resources? If it does, it's got to spread out across an enormous landscape for it to benefit anybody. So I think it's harder in resources for a lot of those companies just because there's so many of them. Now it's been made a bit more easy recently because of the price of gold creeping up, price of copper creeping up. One or two commodities are starting to show a bit of froth there. And that's a hard one to read in terms of where that leads. But in the short term, that's added a bit of liquidity to that small cap space. But there's an awful lot of names which have still been their share prices falling or weakening rather than going up and being able to raise money. So what we see when we talk to people about how easy it's been to raise money, it's been very, very difficult. Unless they already have a great register.
Could I add something there as well?
Absolutely.
I mean, if you think about a mining cycle, on the way up, there's a maximum of greed driving people. They've got no idea often what they're investing in. And on the way down, there's a maximum of fear. And not only that, but things that they've invested in that they want to keep alive, they're having to sell. So things, and they pick a few that they're going to try and keep. But at the end of the day, if there's capitulation, they all go down and go south. So it's just a fear and greed sort of an index there. And the other thing I'll add is that investors will always pay more for something that they don't understand than what they do understand. So if you're looking at a gold company, it's pretty easy to value. You've got a good idea of what's happening. If you're looking at a new exploration story and discovery, most investors wouldn't have any way of measuring that. Or if you're looking at lithium or rare earths, possibly even uranium, there's not a lot of understanding out there in the market, and brokers are used to provide that service. There's no one there now guiding. So it's very difficult for an individual investor. And they, as always, just run on greed and fear.
So you think today, even with the internet and all that information, it's more difficult now for an investor than when it was pre-internet, when you began it? At least you had an intelligent broking service that knew what the game was.
Absolutely. Because with the internet, there's no check. Whereas if you go back 30 years and see brokers who had analysts who came out of a professional mining background, they would have a whole index of people that they could ring and just check what was going on. Nobody checks now. They just come, and it's often people following the loudest voice. So the speculator is left without guidance.
Yeah, absolutely. And I know Hedley, whenever I see him, he's always got across all the projects and all the people in an amazing way, which is quite rare now and very valuable, obviously, with as you say, with the current environment. Well, let's bring it to gold a little bit. The Aussie dollar price has been high for a long time, but it feels like it always sees off the US price. Is that fair to say?
Yeah, the US price is what moves the most, and that's where you tend to capture the sentimental moves. I mean, the Aussie price gets magnified or blunted, if you like, by the exchange rate. So the Aussie dollar has weakened. I think there's maybe not crashed, but it's certainly fallen from a position where the Aussie economy was looking perhaps a little bit more resilient than the US. I'd say it's probably not anymore. And the combined interest rate outlooks and things. So that's been a bit of a boon for the Australian gold producers. Being able to sell their product in Australian dollars is magnificent, but it's underpinned by the US dollar gold price going up.
I'm just thinking, in the last year or so, we've had the nickel wipeout, the lithium wipeout, the rare earths sort of come off the boil. Is the average investor, if you like, with these self-managed super fund, either had a gutful of mining, or is he going to go, well, I'll go back to gold because at least it's holding up? What's the sort of psychology there? Do people get fed up with mining stocks and the way the volatility?
I tend to think they do, yeah, and that's what drives the down part of the cycle, particularly if it's something that's a resilient down cycle. Having seen this flurry in gold, I mean, you see indicators like the amount of videos which are being watched on investment channels and things like that. If it's got a gold flavour, it seems to be getting lots of views. I don't know if you've seen the same yourself, but
absolutely. I mean, we can tell roughly with sentiment of we've got a gold service, so obviously interest goes up when gold's
so there's
rising.
The interest driver. I think that's curiosity. Is that translating into investors writing checks for things? And that's where I think it's really interesting, because if you look broadly across what's driving the gold price, this seems to be Eastern markets purchasing physical gold from Western sellers. The Western financial markets don't seem to be anywhere near as strong on getting involved in purchasing gold. So either they don't believe it or they don't palpate the opportunity in the same way. And perhaps that's money rotating out of Chinese market that typically own US dollar bonds is now buying gold instead. That's a sensible driver. I can understand the theory. But your mum and dads with a self-managed super fund might not have the same view at all. So are they buying gold equities? I think they're probably seeing the price go up and these things look a little bit more attractive, but to my mind, it's not translating itself into what you would expect to happen if this was a runaway gold market. Now, it could turn into that, but it hasn't yet.
Well, it's funny you say that, because I remember 2021, gold shares were absolutely roaring, but it's not like that right now. And
correct.
I'm not the only one to note it, but you've got the gold price doing this, but the equities sort of just sideways, yes, no.
Could I go in this one just with a historical perspective? Again, going back to 1986, 87, Homestake Gold was floated in Australia. The gold price was going up. It carried on going up. You saw the 87 crash. Homestake Gold went down to about 2/3 of its price within a few days of the crash, and the gold price went up. So it's not always price related. There's a lot of sentiment, and it depends what international markets are doing. And probably coming back to today, the Canadian gold market has been, investor in the Canadian market has been one of the drivers of the global investment trend, and they've been out of action for the last 10 years, either going for cannabis or going for something else. But the Canadian market is very, very weak at the moment, and often the Aussie investor is a follower rather than a leader.
It does set up the opportunity in gold, though, right? Because you have a situation where the shares, especially the junior ones, are down in the dumps effectively, but the gold price is strong. The outlook for gold is pretty good. I mean, it only takes a small shift and they can really start moving, right? Is that part of what you're hunting?
Yeah, absolutely. And I mean, you think about what drives equities. Partly it's the gold price, but partly it's what else is happening in the sector. We've seen strong cost inflation. I think that's probably moderated now across the mining industry. So some of these gold producers are able to expand their margins. But if you're not producing gold, you're just an explorer, and that leverage of price to exploring for gold I don't think that connection has really taken place. Now, what would motivate equity investors would be to see some of these bought. When the Australian dollar falls, foreign investors start looking in and saying, well, I can see value there that I can't see in my home market. And we've seen this flip-flopping of international money, particularly in the M&A market. And there's a sense, Newmont for Newcrest, for example, that Australian gold stocks might have some value to them to foreign buyers. We'd seen them depart when the Australian dollar was going to parity. So, now we're back at 65 cents. The M&A market does have some chatter about that. So it'd be interesting to see how it plays out. But you see one explorer with 1 million plus ounces get bought by a Canadian or US company, then I think there'll be a lot of sentiment that spreads itself out across the exploration sector.
You alluded to Canada and America there, and I was listening to, is it the new podcast, the Money of Minds one?
Yep.
They had a North American guy, and he's like, of course, in America, it's all about tech. Like commodities have just, it's been dead for like 10 years. So that American money really could come in if they start to get worried about inflation and negative rates and all that sort of stuff, and tech comes off the boil because it's been so high for so long. Those guys have a very big chance to come back to the Aussie and Canadian markets, right?
Yep, huge pool of money. And that's what happened after the dot-com boom and bubble in the late noughties, the early noughties, the late 90s. There was there'd been a mining collapse. It was prolonged because a lot of that risk money just went somewhere else. It went to tech, and it inflated some crazy valuations, but that's what loose risk equity money does. So if it's parked somewhere else now, people wonder why you haven't seen crazy valuations, particularly in some of the bigger miners, and that'd be my answer why. But when it floods back, and it will do one day, that'll change.
It's worth, on that point, it's worth throwing another factor in there. The Aussie dollar is a commodity currency. Sure, interest rates and other things, but if iron ore takes a fair drop, then you're going to see the Aussie dollar come under incredible pressure, and you'll see people around the world then looking and saying, well, we can buy these gold companies for almost nothing, and you'll see our ownership of Australian golds disappear overseas again, because you don't really have a lot of support from the government saying, let's protect local industry. It's so if the Aussie dollar goes down because iron ore goes down, coal is already going to be weakening for other reasons. So it's watch iron ore. It could be a factor that people are not looking at.
Do you think too, especially with your experience of mining cycles, that we need a narrative? I feel like previously, obviously, it was China, right? So China, it's sort of, the demand is there, but it's not quite perceived the same way. Does it take something like decarbonisation, or what's the big narrative that can come in, possibly?
Well, decarbonisation should be driving everybody towards the metals in Australia. And you've seen parts of government going off, but they probably don't understand yet what they're doing. I mean, who in Canberra would understand Australian mining? They're too far away from the outback, and WA in particular. So I'm not sure that a sophisticated investor or a mum and dad investor would yet believe that the government's doing the right thing, picking winners. We are in a place where I think we need a little bit more guidance from the top, and the narrative is some way away. So it's an opportunity for investors, because I think you're going to see people just avoiding the space for some time, despite the fundamentals looking so strong.
Well,
that narrative of China existed from the late 90s right through until 2007 and 8. It was about 2004-5 that the equity market really started to believe it. And that's when equities unhitched from commodities. Commodities had already gone up, but equities overtook them. So I think the narrative is one thing, rubber to the road on the narrative is another. So at the moment, decarbonisation and all the things which need to drive the consumption of metals to create greener energy are believed, and they're real. It's just, when do you see rubber to the road on that? And at the moment, it doesn't seem like it's a real thing. So I think when that happens, then you see the equity market get much more fascinated by it.
Well, let's talk a little bit about lime. Obviously, with mining equities, you've got a huge spread. You've got the big producers, which most people will own anyway in their super fund, the mid-cap producers that are already in production, cash flow positive, that type of thing, then the developers, and then the explorers kind of thing. Where do you guys going hunting?
We go hunting where there's a project inside of you'd typically call them an explorer because they're not developing yet. And we go looking for things where we say there's a project there which is extremely valuable and it's undervalued by the market. We're commodity agnostic, but because we look at risk so much, we tend to find a lot of gold things, plus or minus a bunch of others.
And actually, it just occurred to me at the AGM, which I went to when you did your presentation, that you made a point of saying that Lion historically didn't have many cash-producing miners, and that may have been a mistake at the time? Or what are your thoughts about that, the balance of your portfolio as such?
It would be good to have a cash-producing asset or two. We had the opportunity when we came under takeover attack in 2011 to do that, and the opportunity was robbed. So we've been taken out for the last decade of not having enough cash to put that in place. We're now in a position where Hedley is looking very, very carefully at being able to do that. And it could help iron out some of the bumps over the sector for us, because our price can go to a big discount. Right now we're sitting at a discount, which is an opportunity for investors. We've even got less of a price than the amount of cash in the company. And had we got some cash flow production and ability to pay a regular dividend, I think you'd see us trading at a premium to the breakup value.
But again, it's sort of that discount that you mentioned alludes to the idea that investors are not really chasing mining and mining stocks in a way that they have done in the past, right?
I think we're also viewed as a listed investment company, which is a historical artefact, but they are all trading at discounts to their breakup value. So we've kind of got a double whammy there. We can unlock one by demonstrating what our assets are and showing that value clearly, and also demonstrating that probably a large portion of those you can't get in the market as an equity investor other than by buying line. And the other way is for sentiment towards miners to change. But I think your point that sentiment is depressed and that's leading to depressed valuations for anything below your BHP and Rio level is also correct.
Well, you have been, I remember you spoke in 2022 roughly, I think Lion at that point was cashed up. You're starting to feed some of that into the market. Do you want to talk about some of the projects?
Yeah, definitely. We've invested, so we sold out of 2 Indonesian gold situations. We did very well in exiting them. I think we left some value on the table, but you're getting out of Indonesia, and sometimes that's not possible without leaving some value on the table. Not your typical exit M&A market, if you like. We had $95 million that came out of those. We dividended some. We had a buyback. So we kind of consolidated the capital management position of Lion, if you like. And then we saw the market start to weaken. And we thought we're tipping over the top, particularly for the micro caps. So we've invested on the way down. We're not trying to pick exactly where the bottom is, because that's folly. We're going to invest through the bottom. We've put away 7 new investments since we exited Indonesia. I think there's about just over $10 million been put into those. That portfolio of new things is worth almost $14 million now. So we've got a little bit of performance off of that already, which is very pleasing given that we can say to our shareholders, short-term strategy has worked. So far, we've focused mainly on gold. The best opportunities we've seen in terms of price, risk going forward, and ability to turn something into a project or sell the whole thing have been very attractive in that suite of gold projects. Only in Australia. We don't want to go overseas again for the next little while. I'd say we've got our foot on the best undeveloped gold project in Australia in one of those investments. And we've got our foot on what is the largest undrilled hydrothermal system. I know I'm getting a little bit geological there, but all bodies occur in hydrothermal systems.
Okay, I'll take your word for it.
This one has never been drilled. It's never been touched. It was unrecognised until 24 months ago. And we've got a 49% shareholding in the unlisted company which has that. Now they've got some gold numbers and some copper numbers which have come off of the top of that as surface geochem. So all of a sudden you've got, probably what amounts to a heck of a lot of smoke over the top of something which is extraordinarily large. So we've got excitement in the portfolio as well as having very high quality stuff.
And we should say, is it right to say your time frame is 5 to 10 years?
Yeah. Yep.
So you want to go from the very micro-cap company that becomes Northern Star kind of thing,
and then invest
ideally.
And then invest in stages over that time. Yep. And that allows you to blend with management. And I think the 7 companies that we've invested in so far, we are very, very happy with management, and they seem happy with us. But it's got to be a partnership as you go forward. Yep. And you then invest in stages and help them to grow, and that way you are true partners.
One of the things which has struck me as a cliche in I think it's 17 years now of looking at little hopeful mining companies is they all have a slide on their management, and they say best management team, we've got 100 years collective experience, and it's wonderful, isn't it, that those 600 companies listed on ASX, they've all got the best possible management that money could buy. And in some cases, there's a lot of money buying them, that aside. So we decided, let's see if we can turn that cliche into something that works for us. So we put up our management slide, and it's got the people who run Lion, but then there is a whole collective family of very high quality people that we're backing inside of those investments that we've made. And I mean, we're capitalised at less than $100 million. There would not be a company in the world capitalised at less than $100 million that has a better management team than us when you consider that greater family. They're people that we will work with. I'd be quite happy to work for many of them. And if we end up, doing things over many years with them, we're at the start of some fantastic relationships.
Well, let's just jump on that, because you have the junior resource base, and there's like hundreds of these stocks, right? And they all go, oh, we've got the great deposit. And let me throw some terms at you, and you tell me what you're looking for. Say, like grade of the metal, what the deposit, the metallurgy, the team, the finance, the execution. I mean, how do you weight these things?
Well, they're all important, right? But you get so many people standing up at a conference where they have been able to report high grade, and they will say, without a doubt, grade is king. And it carries this connotation that All you have to do is find high grade and you'll be able to mine it. But high grade is one thing. Its distance from the surface is another. Its thickness is another. I mean, if you have to extract 10 times as much waste rock to get out that little bit of grade, you don't have grade anymore, because ore plus waste makes more ore to a lot of mining engineers. And that's the equation you have to run when you're extracting these things. So grade to me is not nearly as important as geometry. So if you've got something which is close to the surface, it's thick, you can mine it with a very, very efficient bulk mining process, and then you can process it cheaply. You could do that for 0.5 gram in gold and make plenty of money. But you wouldn't go underground for 0.5 gram of gold. Thing is, I've seen so many deposits which might be close to 10 grams gold and you still wouldn't go underground. So clearly gold is not king because the economics just don't work on the shapes. Correct. So I think geometry is king, metallurgy is king, but you've got to put all those things together. And that's where, well, look, Jeff Wilson says this quite well. He says, if you're selling something like ice creams or, things at Bunnings, you can go through and work out exactly how much it costs them to purchase what it is that they're going to sell, how much they're selling it for, and they've got a margin. He says, if nothing changes too much in the economy, you can multiply that margin by 20 years and you get a value of the business and you can discount it according to how much it costs them to borrow money to do it. And it's literally that simple to value some of those businesses. There's lots of tweaks and nuances, but that has very little volatility in it. For us to value a gold business, we have to say, what's the gold price going to be? And that's plus or minus, 30, 40%.
Yeah,
if you're, and you can imagine the sensitivity that has on your end dollars per share valuation. You can understand the physicals usually quite easily. Once you've got a shape and say, here's how they're going to mine it, you can put some costs to that. And lots of people do, but you've got to understand what will make it a little bit more expensive or what might generate efficiencies. And once you've done that, which, there's plenty of nuance in that, well, you need to work out how they're going to finance it. And that's where the biggest sensitivity of all comes in, because if you and I are talking about a fantastic gold project, it's still got to find the money in order to put itself into production. So it could be trading at 20 cents per share now, and you say, well, it's got inherent value of $2 a share. So that's 10 times upside, right? But they've got to issue all this stock in the meantime. And given that you're trading at 20 cents, your best assumption is it'll be issued at 20 cents or thereabouts. So the dilution which comes into those stories is actually the biggest sensitivity, and that's where you've got to work around. Is this going to be financeable? And that's an equation of people, quality of the project, and market timing. And that's where a lot of retail people are really going to struggle.
Just as a rough, I'm just going to pick a name out. There's Bellevue Gold, right? And I'm just going to say it went from, say, 10 cents to $1.70 kind of thing. That's like the dream run of a gold miner, right? So for people watching this, what happened to turn that 10 cents into $1.70 roughly? Like they started with an old deposit, I think, is the story.
Yep.
What are the sort of stages that take it that huge growth?
So there's a grade is king story, right? And it is quite narrow. What they've managed to do is detect a hell of a lot of mineralisation. So
they found more gold, basically.
They found more gold. So it was an exploration success story. I think they probably had a fairly strong conviction that they were going to get that. So they were able to launch their marketing very strongly. And they had excellent market penetration. They were very, very good at marketing. They had some people involved who were already...
Marketing the company?
Yeah, marketing the company. So, what are you selling when you're running a little company? Are you selling gold? Well, if you're not mining...
Dream.
If you're not mining gold, you're not selling gold. You're selling a dream. You're selling your shares. So what those guys were really, really good at in that first period when it's absolutely crucial is they were great at selling their dream, which made the financing and everything else and that dilution per share, which comes in as you finance it.
And then they build the mine with the money that they've raised.
Yep.
And then the gold price in this time has been supportive. So the market starts to see the cash flows come through.
Yep. So they poured their first gold, I think, in January or February this year. Stralo's going to send me an email, I'm sure, if he sees that and I've got that wrong. But look, it was early this year, first gold. So when you commission a new mine, to know that you've nailed your cash flows and you're getting it right, you've got a couple of quarters to report of steady cash flow. When you start a mine, you've got all sorts of inefficiencies you need to deal with, and particularly when you're starting a process facility. So I think as you get into September, October, they're going to be able to say 2 solid quarters. That's what it looks like.
And that's roughly 5 years, 6 years from the deposit when they overtook. I can't remember. There's a rough timeline.
Yeah, I think 5 or 6 years. So it was quite quick. But bear in mind, there was a lot of things that they had, like access through an old decline. Permitting wasn't on the spot done, but there was a lot of historic parts of their tenure which was able to be reactivated. Infrastructure provision, they could sort of reinvigorate old pipes and power lines and things like that. So they could accelerate through that. 10 years might be a more reasonable assumption for a new discovery.
Fresh start kind of thing. So when you have your portfolio, do you have a I mean, most small cap funds would run like 40 names kind of thing. Do you have like a limit of how many you'll run? Because you can't go all in on one, right? So you need a basket of them. Do you have a rough idea of what that number would be?
Yeah, we say between 10 and 20. What we've found historically is that with a small focused team, which you don't really want to lose control of, the more people you've got in a team and the more opinions you've got contributing, you find yourself with one of the least efficiency democracies that exist. The smaller the democracy, the better sometimes. And when you've got a small investment team, you can interrogate ideas between yourselves. You can be quite robust in your discussion. When you're dealing with 20 people all contributing to one investment, you lose track of what the opinion is and you don't get consensus. You just get a decision to not do something or do something, and it might not make sense. So we've stayed very focused on that, and we've stayed very focused on what's an appropriate amount of things for one person to manage and manage well. So, for us, between 10 and 20 investments, that is what we're spending time on, is going to be the formula that works for us. So we've got 7 brand new things. That means we could probably double that and be sitting pretty comfortably in terms of the portfolio spread. And that enables enough time for me, Robin, and our other colleague, Craig, to be having really quality time with management in each of those companies over time.
Well, let's quickly touch on copper, because I remember I emailed you a few months. I said, why Samphire, Samphire, the copper stock was just suddenly going up, but it wasn't apparent that copper was about to bust out. And very quickly that sort of shot up, right? This thing turns on a dime. So suddenly everybody's excited about copper. But from my knowledge of the mining industry, it's hard to find. There's low grades. There hasn't been much spend on it. I mean, this is part of the bull case for it. I mean, is that true? And can you find any decent copper juniors?
Yeah, look, the outlook for copper long term is absolutely fabulous. It's essential for power transmission. It's essential for power generation, because you've got to wind a lot of copper to make motors. So it's an integral part of this transition away from the old carbon economy, if you like. The thing is, that's a long-term thematic. We haven't seen wholesale, huge jump over, and who knows how long it'll take.
I should say I've heard that for 10 years. Copper.
Well, copper fundamentals. If you go back to when I started my job at Lion and find a presentation that was coming out of a copper company, then they might not be talking about the non-carbon economy, but they would be talking about the wonderful fundamentals for copper, and it's at any one time
similar, right?
They're wonderful.
Everyone went on about it.
And it's a classic of undersupply. There's not enough new discoveries and deposits coming through, and the ones which are known about are too low grade. So this incentive price and creating economics by the price going up for deposits which are going to be a little bit tougher to mine is a real thing. It's just we're seeing copper now sitting about 6 or 7% below. If you draw a line on the copper chart going back 50 years,
the price.
Yep. You will see that the copper hasn't gone above sort of a rough level for about 20 years. The last time it broke out of its old trading pattern was when China's rubber hit the road as just being an enormous commodity purchaser, and they were building a huge economy. So for us to break out of this again, and for this copper bull case to play out to plus $10,000 a tonne, I think you need a big fundamental. Now it exists, but like I said before, the rubber hitting the road just hasn't really happened yet. So at the moment we're sort of sitting there with copper going up because something's tightened in the economy. The forward price of copper is at the moment furthest it's been from the spot price of copper for about 20 years. And
as in higher.
So this is a contango, right, which creeps in and says the forward purchases of copper are paying overs for it, which suggests it should go up. Now I can understand that. It's just I can't understand how that mechanism and that spot fundamental is going to translate into a really high copper price. So I'm curious to see what happens when it starts to bump up against $10,000 a tonne or a little bit more, and how that plays into the future of. I mean, to me, to push copper to 12, 13, 15,000 bucks a tonne, you need an American economy which is roaring, that isn't just about to be inherited by either Donald Trump or Weekend at Bernie's. And you need a Chinese economy which is growing at 15% per annum, which it's not, and it hasn't done for 10 years. Well, India was, in the 1600s, the Indian economy was the largest economy in the world.
William Dalrymple's coming out.
Correct. It contributed 35% of world GDP, but that was 400 years ago. Yes. It's had that opportunity. And what we know about India is enormous potential, enormous impervious bureaucracy. So I think it will get there, but is it going to happen in the next 2 weeks? I'd say probably not.
You're putting a bit of scepticism on the copper bull case. Is that what you're telling me?
Long term, it's there for me, Cal. Absolutely,
it's just, without doubt. Copper is going to be there. You've got to be there. But the other thing to remember is not just about the price. It takes an awfully long time to develop a copper project. And the world forecasters of copper production, all of the guys who work out how much production, how much demand, always get production wrong. They always overestimate what's going to happen, and it's largely due to the planning difficulties and then the financing difficulties of a big copper project. And then they don't always work.
But it is true that Rio and BHP, the big guys, do see copper as that fundamental theme, and they're sort of moving that way.
Well, they've both shown acquisitive interest on that front. And BHP bought Oz Minerals and are bidding for Anglo. And, maybe there'll be a bidding war for Anglo yet, we'll see. But that copper seems to be the motivating factor there. So if anyone else bids, it's probably their motivating factor as well.
But put yourself in a BHP director's position there, or the managing director, or Rio, or any of the other bigger companies, but particularly those two. They're out of coal, they're out of oil and gas. Iron ore bubble might carry on going for a bit, but it won't carry on forever once West Africa picks up. And that is going to really strip them of revenue. Where else do they go? When you have a look at the other metals, most of them are small markets.
Too small, that, yeah.
So there's not really anywhere else that they can, there's no coal that they can go for. Oil and gas, the big market, they can't go for. If iron ore goes and China starts shopping in West Africa, then BHP and Rio are going to have to find another commodity that they can produce in bulk at low cost. And they probably figure copper is the one, but it's not going to be anything like iron ore and coal were. So it's just worth putting your mindset into a BHP or Rio director's shoes, and whether they truly understand the markets that they're going to have to go into. Do they go into fertilizers? Big market there, but it's not something that they've been in. They've got a little bit of a foot in both of them. The other markets are not big enough. Nickel, you've talked about, it's just been shot by the Indonesians and China. Lithium, they probably don't have the expertise, and they're not too sure where things are going. How far down the curve do they go? They're in a tough position.
Oh, interesting. Now, you mentioned before you're focused on Australia. Would you go to Canada?
I was in Canada.
There must be copper projects there.
I was in Canada in February this
Cold?
year, so it was very cold. Yeah, it hit -10. And I was laughed at for going outside during dinner to get snowed on because it never happened to me before. Canada is a jurisdiction which is so similar to Australia that it's so tantalisingly tempting. They speak English, we speak English. I think what I've found over years and years of dealing with Canadians is that we both speak the same language, but we can mean completely different things. And our business paradigms can be quite different as well. So, there's an adage going back a long time. Don't buy oil in America and don't buy gold in Canada because the vendors will see you coming. That's the basic rule for Australians. So if you think, I can do gold in Canada better than a Canadian, you're kidding yourself. They will know all the skeletons in the closet around something. You'll see the good parts, but they'll know everything about it. You'll buy it and then they'll be laughing. The same works in reverse. So, when they come here, they sometimes get bitten as well. So am I wanting to go to Canada or anywhere else for that matter for access to these things? Yeah, there's good geology in some of those places, but
what were you doing in Canada then?
One of our legacy investments is a Mongolian-focused company, and it's headquartered there. So I was visiting them in Halifax, in Nova Scotia. So they're developing a 4-gram gold open pit in Mongolia. Very exciting place to be, and something that probably comes to maturity in our portfolio in the next 12 months or so.
So you mentioned West Africa there with the iron ore. I noticed some of the goldies in West Africa, there's basically wars going on around them, but they're still going up on the market. There's more aggressively than the ones in Australia. What's go there? Is that just the pure margins?
They would probably argue that they're significantly undervalued because the West African producers, they trade on significant discounts to, say, the Australian subset, and their assets, in many cases, are slightly superior in terms of their grade and geometries and size and life and everything else. So they're discounted, I think, for the Africa factor. But Africa is intensely cyclical as well, just on different timeframes to financial markets. Was it 2007 or 8? If you were finding gold in West Africa, you'd be more valuable than who was the name at the time? A Silver Lake or a Saracen. Yeah. You could be exploring and be premium valued to a producer in Australia. The flip side is now true. So, I think you're right. Some of them have performed well. That's a squeeze on the gold price, just leveraging their cash flow.
And some of them got incredibly good management. Jeff Gresham, who you interviewed last week in Perseus.
Jeff Quarterman
had done an incredibly good job. Jeff Quarterman had done an incredibly good job with Perseus.
Yeah.
And now he's moving into East Africa as well, spotting opportunities. He's got a lot of cash, and he's that's a standout.
That's a business which has a larger operating margin in Australia dollar terms than, say, your Evolution. produces not quite as much gold and doesn't have a copper credit, but they're half the value, and they're nowhere near, they're well over half the size of the business when you just look at the kind of cash they make. They've got $1 billion of liquidity, $700 million worth of cash US on their balance sheet, plus a $300 million facility. So they're flying, yet they're valued at half roughly what Evolution is. So the market, I think, coming through particularly COVID, but there'd been years before that when there'd been a long, deep mining bust. And I think a lot of investors ran away from mining, whether they're gold miners or BHP, it doesn't matter what it was. And they rationalised there've been so many poor investments made in the world by miners with low returns on capital or just complete destruction of capital, that they were done with mining. And where they've crept back, they've been very, very low tolerance on risk. So I've got $1 to spend in mining. Do I want it to go into West African gold, or do I want it to go into BHP, which has one of those 6.5% yield or something? The cash flows in BHP are coming out of iron ore. You sell a ton of iron ore for $100 or thereabouts, and you've made it for $25. So you've got an enormous operating margin, but that's off the basis of long and very large investments in capital infrastructure, which provide that operating margin now. I sent some Christmas cards to England in December. It cost me more to send 4 Christmas cards to England than it did to send a ton of iron ore to China. So go figure.
You've got to check with your local post office. Well, I think you're getting ripped off.
But this is the thing, right? This is the efficiency that exists in those businesses. So, but BHP is trading on that yield, even with that cash flow. So I think there's a lot of risk tolerance which just disappeared from mining, and it's happy to take those risks in tech. Hasn't been burned in it, but in the last 20 years. There's been people whose fingers been burned on big things in mining, and they've just still been, creeping back towards it. So I think that plays to it as well.
Well, let's conclude with the clock. So it's all about the clock, really. So roughly we're at 2 to 3. What's the next phase?
Well, we've said 2.
4, but
we've said 2 to 3, which is we've said it moves to 4. We've said 2 to 3, which is an observation of that clock is wound on liquidity. So it goes round as more money comes into the sector. Miners go up, you have a mining boom, and then the money starts moving out of the mining sector and you have a mining bust. So our commentary is that money is moving out of the mining sector. That's our observation of liquidity towards those juniors, and they are the canary in the coal mine of junior mining investing. Now, the question is, have we been wrong about that? Is that money going to move out of the BHPs and the Rios? It's up to commodities as far as that goes. So, if we have an economy which supports massive growth in copper in the next 2 years, then, I suspect we'll see a top which is higher than where we are now. My feeling is that it's going to be very difficult for those commodities to bust through the roofs, which they're very close to, in which case we're probably reasonably close to that. So what we've said is the new cycle has started because we've tipped over. We're just waiting for the Rios and the BHPs to tip over with it, and that's generating fabulous opportunities for us.
You asked earlier on, Cal, what could be the narrative that will change things. One of the narratives here that could change things would be an easing of the planning laws in Australia. The federal government is wanting to encourage critical minerals, and they're trying to pick winners and put money into the sector. It would be cheaper and more efficient to put some focus on the planning laws and make sure that you could develop a mine once you've found it more quickly than you can at the moment.
So you're saying it's too restrictive, basically?
Very, yeah.
Is that because of the sort of environmental impacts and all that type of thing?
It's because the planning process has got longer and longer with environmental, indigenous, and all of the other things. There's just more bureaucrats in the way of drilling a core and developing a mine than there ever used to be. You have a look at the planning time it takes for an average mine. It's increased year on year for the last couple of decades. And something needs to be done if we're wanting to change. And if that flag was waved by federal government, I think you'd see a pretty quick change here.
Well,
it takes as long for the bureaucracy to work in that as it does for the actual process of collecting environmental information or the scientific study of what needs to happen or consultation with local people. So, the bureaucracy that sits on top of that leads to a signature takes just as long.
But again, that's all part of the bull case, right? Because
you're right. No, you're dead right. But the bureaucracy provides uncertainty. That's the point I'm making. And investors don't like uncertainty.
You take that uncertainty away and it helps the next boom.
Just for a bit of fun, let's fast forward 5 years. What does the top of the mining clock look like? What's the world look like then? Stocks are booming, there's takeovers. What else is going on in our imaginary top?
If you fast forward to the heady days, the 10 o'clock onwards of the next boom, You got gold probably well above 3,000. You might have copper, which is well above 10,000. You would have, I would say, another couple of serious mid-tier companies in the Australian market, which have been acquisitive at low levels, and they've been able to grow without people knowing until all of a sudden they're there and they're producing and they're significant. One of those might be Lion, LSX, and off the back of some of the investments that we've made. And I think you will see some interest into foreign countries as well. So, some of the riskier jurisdictions. And I think one of the qualities of that would be that, there's been a spreading of risk money out of tech and into mining again. I think the next cycle will see that happen.
Well, I'm excited for you, gents, because I think, I saw the general small cap market collapse in 2021. And again, it's all sentiment driven and liquidity driven. And you sort of see everything on the floor and you're like, well, now's the time to scoop it up and then see what happens kind of thing. So it'd be really interesting to see.
It's just hard when you see a bargain because you need to be able to follow your money. Well, you need to be able to follow your money, right?
It's an exciting time.
I feel for a lot of retail investors because they say, well, I'd like to do that and that and that and that. But then when a rights issue comes along in all four of them, they're like, well, now I need to sell three of them so that I can do one. So being liquid through that period of time and having access to cash you can't take advantage of it any other way. So that's one of the things that we feel so fortunate about is there's that opportunity, but we're extremely liquid at this point to be able to follow those things.
Beauty. Well, there you go. There's the latest from the boys at Lion Selection Group. Really exciting outlook for the junior mining sector. If you can look at, you've got to be patient, right? You've got to be patient in this sector. And we'll see what happens with gold, copper, lithium, all those exciting stories over the next few years. But for now, it's looking really good.
Thanks, Cal.
Thank you, Cal.